Hello and welcome to this video. For those of you who are new to this channel, I'm Dr. Subayal Khan. I'm a business strategist, experienced investor, award-winning scientist, and also help the business owners as a coach and sales mentor. So Alibaba has been a lot in the news lately, and on tip ranks, it has obtained a strong buy rating from the analysts, and the hype can be gauged from the fact that out of 22 analyst ratings, 20 are a buy, 1 is a hold, and only 1 is a sell rating. Furthermore, it occupies a pivotal position in the stock portfolio of some of world's best investors, as we will see shortly. In today's video, we will analyze the Alibaba stock thoroughly to see if it is a viable value investment with the current price or not. First, we will provide an overview of Alibaba. So Alibaba Group Holding Limited is an e-commerce giant which delivers value to its targeted markets via the online and mobile marketplaces in retail and wholesale trade that it operates. Overall, Alibaba has 4 distinct business segments. The first one is called Core Commerce, which includes Taobao Marketplace, Tmall, 1688.com, Lazada, Alibaba.com, and others. The second business unit is Cloud Computing. The third one is called Digital Media and Entertainment, and it includes Youku To-Do, Alibaba Pictures, and other content platforms. And the fourth unit is called Innovation Initiatives and others, including MAP, DingTalk, and Tmall Genie. The company was founded by Chung Tasai and Yun Ma on June 28, 1999 and is headquartered in Hangzhou, China. In 2019, Alibaba generated $56 billion of revenue from its combined activities, and as a result, it emerged as the 4th largest e-commerce business in the world, which earned it a respectable position between Facebook and Google, which is a tremendous achievement. Alibaba's competitive position and sustainability is not a coincidence, but an incarnation of the so-called the Iron Triangle of Alibaba Group, which makes it very difficult for the competitors to challenge its dominance. The Iron Triangle refers to the 3 areas of joint activity. The first one is e-commerce, the second one is finance, and the third one is logistics. Now let's have a look at each corner of the Iron Triangle. So now let's have a look at the first corner of the Iron Triangle. So unlike large competitors Amazon and JD, Alibaba sites Taobao and Tmall carry no inventory, or in other words, there are no big warehouses for the fulfillment of customer orders. In reality, they operate like eBay marketplace where merchants sell their products. The revenue is generated via the ads which are run by the merchants who want to get more attention or get in front of more customers to outshine and outperform their competitors. The top 3 e-commerce websites of the company have 10 million merchants in total, and over 1 billion different products are sold on all 3 of them combined. And now let's have a look at the second corner of the Iron Triangle, which is logistics. The deciding factor in the success of an e-commerce business is of course its ability to send products from one place to another. It is mind-blowing to comprehend that in China, on average, each person receives 1 package per month. To meet this huge demand, Alibaba utilizes its dedicated logistics subsidiary called Canyao, which has truly reinvented the modern delivery. The company operates by indirectly employing between 2 to 3 million human couriers via a network of partner companies. With this much scale, the company can easily fulfill demand during any event. For example, the Singles Day in 2015, which required the delivery of 467 million orders. Now, this segment of business has been strategically decoupled but is still a part of the big picture drawn by Alibaba, and in this way, it controls this part of the supply chain, which is crucial for its positioning. This separation of concerns but organized and optimized decoupling enables Alibaba to flexibly control this part of the supply chain, which is fundamentally important for its positioning and long-term sustainability and competitive advantage. And now the third corner of the Iron Triangle is finance. Since smooth payments is another pillar for the rapid growth of an e-commerce business, especially in China where banks are not trusted enough by people, Alibaba invented Alipay, which was introduced in 2004. This payment company enables China's consumers in making safe payments to any merchant in the country. It is very similar to PayPal, and the funds are only transferred to the seller after the buyer has approved that the merchandise has been received. The profound impact and the strength of Alipay is evident from the fact that even as far back as 7 years, that is in 2014, Alipay processed 778 billion US dollars in sales, which is 3 times more than eBay-backed PayPal. Currently, the Chinese consumer payment market is essentially a duopoly of Alibaba's Alipay and Tencent's WeChat. So out of the 72 world's best investors, we can see over here that Alibaba is 21.4% of Greg Alexander's portfolio and 21.13% of Mohnish Pabrai's portfolio. And also we all know about Charlie Munger, right? And it has been 17.59% of Charlie Munger's portfolio, which is amazing. Then it has been 5.05% of Guy Spears' portfolio and 3.55% of Christopher Davis' portfolio. And over here we can see that Alibaba has been trusted by some of the world's best investors. It forms 21.41% of Greg Alexander's portfolio and it is 21.13% of Mohnish Pabrai's portfolio. And if we look closely, Mohnish Pabrai increased his holdings of Alibaba stock by 53.23% recently. And this information is very critical because it shows that the savvy investors trust Alibaba stock. And now let's analyze the Alibaba stock through our 14 value-centric dimensions to evaluate its feasibility as a long-term value investment and also see how much score we get out of 100 for the Alibaba stock. So as I always say, I will be interested to see if we can get a score of over 75% and see the parallel between our feasibility analysis and the opinions of analysts as well as savvy investors. In other words, I will be interested to see how well our dimensions converge to the same conclusion as the analysts who have given it a strong buy rating and also savvy investors who have made it a part of their portfolio. TipRanks is a good tool and I use it quite often to look at the most trending stocks and what analysts are saying about it. But I also have my own criteria which I use to shortlist the stocks, and the whole point is to give you the unbiased opinion also, as I myself learn about investing each day because I think of life as a learning process. Later on, if our dimensional analysis validates its feasibility as a good investment, we will look at the current state of the market through the lens of 6 critical dimensions of market state to gauge if it is the right time to accumulate Alibaba stock or shall we wait for the market to offer it to us for a cheaper price. So now let's go ahead and first analyze the Alibaba stock via the 14 dimensions of value-centric investment feasibility. So looking at the key numbers, the price of Alibaba stock is 178 US dollars. The market cap is 478 billions. The PE ratio over the trailing 12 months is 21.2 and the PEG ratio over the trailing 12 months is 0.3. The earning per shares over the trailing 12 months is 8.4. The price to book ratio is 2.8. Price to sales ratio is 4.1 and the price to free cash flow ratio is 21. And if we look at the past 5 years, the average revenue growth has been 44%, the average asset growth has been 36%, and average equity growth has been 38%, while the average net income growth has been 58% and the average liability growth has been 34%. And over the last 10 years, the average revenue growth has been 57%, the average asset growth has been 60%, the average equity growth has been 98%, the average net income growth has been 68%, the average liability growth has been 58%. And looking over the most recent 3 years, the average revenue growth has been 48%, the average asset growth has been 37%, the average equity growth has been 39%, the average net income growth has been 51%, and the average liability growth has been 34%. And over here we can see that over the past 10 years, the total revenue, which is shown by the gray bar graph, is increasing, and also the net income over the past 10 years is increasing, which is shown by the red bar graph. And same is the trend for the last 5 years. And as far as the key ratios are concerned, if we look at the total assets over total liabilities, which are shown by the blue line, in my opinion, for most of the times they should stay above 1, and they do stay above 1 for the last 10 years. And as far as the total current assets over total current liabilities are concerned, which is the second key ratio which I look over here, I always want it to be over 1, and it has been the case over the last 10 years. And same has been the case for most of the time over the last 5 years and also over the last 3 years. And as far as the PE ratio, price to book ratio and price to sales ratio is concerned, I am most interested in the PE ratio. And if we look at the PE ratio, in 2015, the stock was very expensive because the PE ratio was 53.42. It was never on sale over there. And as far as 2016 is concerned, the average PE ratio over there was 17.79, which simply means that in quite many months, the stock was on sale. In 2017, 2018 and 2019, the stock was never on sale. And in 2020, the average PE ratio was 24.55%, so it simply means that maybe for a few months the stock was on sale. When I say that a stock was on sale, it simply means that the stock was trading at a price such that its PE ratio was less than 20. Or in other words, the earnings were high enough so that if I accumulate the earnings over the coming 20 years, I will get to the price of the stock. So that is more or less the idea. And here is the graph of percentage growth in total assets, total liabilities and total equity shown by gray, black and red bar graphs respectively. So feel free to pause the video and look at the growth rates in particular years if you want to. But most of the times we can see that all of them have been growing over the past 20 years. But over the past 5 years, the growth has toned down a little bit as compared to 2010 to 2014. And here is the graph of total assets, total liabilities and total equity growth respectively over the last 5 years. For the whole of the period, it has always stayed above 10% for all of these three growth rates. And as far as the ROE or return on equity and return on invested capital is concerned, we can see that for almost all the time during the past 10 years, it has stayed above 10% most of the time. And same is the case for the last 5 years and the last 3 years. And looking at the gross EBITDA margins and operating margins, we can see that the gross margins are quite high actually. In 2012, they were 83%, which is huge. But then they steadily declined and reached a growth rate of 45% in 2020. And the graph of EBITDA margin and operating margin follow each other very closely. And we can see that over the last 10 years, they have remained over 10% for almost all the time. Even in 2019, when we see this dip, the operating margins were still 18% and the EBITDA margins were 26%. And also over the past 5 years, the EBITDA margin and the operating margins have remained over 15% as we can see. And same is the case of the last 3 years. So the numbers look quite promising. As far as the diluted shares outstanding are concerned, the number of shares decreased drastically from 2010 till 2012. And then they have been steadily rising but with a very low growth rate. But when we zoom in into the last 5 years, we can see a more profound growth in the number of shares. And over the last 3 years, the growth is even more profound. So it means that Alibaba has been issuing more shares. And looking at the investment feasibility score, feel free to pause this video at this point if you want to look at each and every dimension. So over a time period of the last 10 years, we got an investment feasibility score of 86%. Over the last 5 years, we get an investment feasibility score of 71%. And over the last 3 years, we again get an investment feasibility score of 71%, which is quite good for a company of this size and magnitude. So we conclude that the results of our value-centric investment feasibility analysis does not contradict with the opinions of investors. They are pretty close and there is a lot of parallel in them. So we conclude that the result of our dimensional value-centric feasibility analysis are in agreement with some of the world's best investors. Therefore, we agree with what they have concluded for the stock. Of course, we look at an overall score of over 75%. The Alibaba stock has only managed to achieve a score of 86%, which is over 75% over a time frame of 10 years. But it achieved a score of 71% over a time frame of both 5 years and 3 years. However, the PE ratio is quite high at the moment. Therefore, we will like the price to correct a little bit so that when the PE ratio falls below 20, which is our threshold for value investment, we can slowly accumulate. And that is pretty much possible because currently the PE ratio over the trailing 12 months is 21.2. So I will definitely accumulate Alibaba stock slowly over the coming years and months as the market presents it to me at a discounted price. But now it will become even more clear that is it the right time to buy Alibaba stock, or shall we really wait? And as you know, if you are subscribed to this channel, before we press the trigger, we look at the state of the market and see the price, sentiment, and hedge fund activity to gauge the market sentiment and the state of the market. It gives us a rough idea of whether we should buy now at least a little bit, or shall we wait a little bit for the market to correct. So for that, let's go to tip ranks and let's investigate. So as far as the opinion of analysts is concerned, it is a strong buy. So out of 22 ratings, 20 are a buy, 1 is a hold, and just 1 is a sell, which is awesome. And unfortunately, no Alibaba insider trading activity was available, so we have to skip this dimension. And as far as the PE ratio is concerned, we can see that in 2019, PE ratio range was between 15.31 and 25.37. So it means that in 2019, the market did offer us an opportunity to buy the stock for a very discounted price. And in 2020, the market did not offer us an opportunity to buy the stock at a discounted price because, as I said, we look for a PE ratio of 20 or below. And as far as 2021 is concerned, the market again did present an opportunity to buy the Alibaba stock at a very discounted price. And the most discount that we could have gotten was 15.41. So it means that during 2021, we had the opportunity to buy Alibaba stock at a PE ratio of less than 20. And as far as the hedge fund activity is concerned, we can see that the hedge fund accumulated a lot during this time when the price was relatively low. And from this point onwards, as the stock price increased, they offloaded the Alibaba stock steadily. And now we can see that the trend is in the downward direction. So they are again accumulating the stock. And it is very interesting to see how smart money acts in the market. And over here we can see that the Alibaba stock has been declining steadily in price in the last 12 months due to some FUD that has been circulating around. But that is exactly the time when the smart money accumulates. And therefore we get a score of 66% for the 6 critical dimensions of current market state for the Alibaba stock. Therefore, the score of the current market state, which is 66% and less than 80%, which we require before pressing the trigger, suggests that it is not the right time to buy. And of course, Alibaba has great value proposition, outstanding fundamentals, but I will accumulate when the market presents opportunities where the stock is on sale, and then I will make it a part of my portfolio slowly over time. So I will let the PE ratio to drop a bit to start accumulating, and I'm sure that the great investors which I mentioned in the video bought the Alibaba stock at discounted price since they are very patient. Thank you very much for your time, ladies and gentlemen, and let me know in the comments below, what do you think about the Alibaba stock? Is it a buy? And do you think that it is the right time to accumulate? I will be looking forward to your comments down below. And thank you very much for your time. Please let me know in the comments below if you would like to watch such content again. And I will see you in the next video. Bye.